I'm going to hit the other side of the argument for silver and gold today. Actually, the other side being a very, very bullish argument for it. And this is a simple definition of fiat money out of the Encyclopedia Online, Wikipedia. Currency, fiat money is a currency that a government has declared to be legal tender, as everybody knows, despite the fact it has no intrinsic value. It's just paper. It's not backed by reserves. That part I might, in our currency, it's actually backed by reserves. It's backed by oil. And I don't know, most people maybe are aware of that, but all oil is in the world on the Western markets is traded in US dollars. And the reason Iran is such the big enemy is that they established an oil market, which is not actually used by too many countries. Actually, China's starting to get a little more involved with that, though. They established an oil market that uses every currency except US dollars. Now, I know some of the people that are very much anti-US that live in the US because of Western policies, but could you imagine back in the ruble? Could you imagine oil back in the ruble? You know how many times the Russian people have gotten ripped off by the Russian oligarchs by saving their money in rubles? It's ridiculous. I should have put those stats up here, but they got hyperinflated into oblivion so many times in the last 100 years. It's ridiculous. So, despite the dollar being the world reserve currency and oil's backing it, every other country in the world would use that scam. I just want to put that out. It's not just the U.S. Historically, I'm just going to go on with this definition. Historically, most currencies were based on physical commodities, such as gold and silver. But fiat money is based solely on faith. And like I did point out an example, that even cigarettes can work as money because people will work for them. If people work for them, produce something with them, exchange goods for them, it makes the fiat money have true value in a way. It does. Investopedia explains fiat money. Most of the world's fiat paper money is fiat money. I think basically all of it. Because fiat money is not linked to physical resources, it becomes worthless due to it risks becoming worthless due to hyperinflation. And pretty much that happens with everybody's currency. The standard time frame that a fiat currency supposedly lasts the longest is about 40 years. And since we've been off the gold standard since the early 70s, that's about 40 years right now. If people lose faith in a nation's paper currency, the money will no longer hold any value. Now, just to be on the side for extreme bullishness for gold and silver, I do think it's going to have a very stellar year this year. But if you're holding electronic assets, my strategy is to dump them this year after I see extreme gains, because I'm not trusting anything, period. Banks, if you want money, I'm thinking paper cash. And I think that stuff's going to hold up longer than people expect. Just like people work for cigarettes, people work for paper cash. So you always want to have some of that around, even though you don't want to be mostly in the cash. I think that would be a mistake. There may be some truth to what Lindsay Williams says about everything in paper can be lost. I don't think that's going to be all across the board. But I do think there's going to be some more situations that are going to come up, like MF Global. It's not going to be the whole entire United States economy is going to go down. It's going to be, I think there'll be another MF Global. It just makes sense. It makes sense. If those guys got away with that, there's got to be more. There's got to be more. It's not that I have special information. It's that I'm thinking, quite obviously, if that was allowed to go on and they were allowed to make those kind of bets with other people's money, there's no controls over what goes on in brokerage accounts. No doubt about it. Despite what they say. And I'm not just saying it as a conspiracy theory. The facts are glaring. I want to get over on this thing too. this is going to be one of the reasons you're going to see gold fly. Not so much that, maybe some of the reasons some of the gold bugs say, but this is going to do it right here. This is an older article from November 22nd, 2011. But I want to drive home this point because it talks about the U.S. Super Committee, which is on a budget, fails to ink a debt reduction deal. So they couldn't agree on how to reduce the debt. And you know what? They're not going to agree. And, getting in a little bit of politics here, I don't think Ron Paul really has a plan. He spouts all these little key phrases. I'd like to see him how he's going to do this stuff, despite what people think. I don't think he's going to. I don't know. I know people hate hearing that, but I think Ron Paul's like something. He's not what you think he is. But I want to get off our subject on that. But this is what's going to make gold go super high, because you're going to see Moody's downgrade the debt. You're going to see, the U.S. debt rating. You're going to see Standard & Poor's downgrade the U.S. debt rating even further. That's what's going to cause a flock to gold. Now, today, we're seeing actually over the last few days, and getting back to talking about debt ground downgrades. What happened in Europe? The euro was all the countries had these their debts downgraded, right? Well, euro fell. What a lot of people were expecting. What were they expecting to happen this week? The euro to fall further? That's, I think, the average person that's into the well, I don't want to disagree that there's conspiracies. There are. I mean, that's the human nature. But some people were taking that as the euro is going to even fall even further. It's going to crash through the floor this week. What happened? It rose. It rose. I think all the markets kind of knew about this, and that's why it was falling all the way along here. So the euro rose. That's kind of like, well, I kind of expected it too. I don't think this euro is going to fall apart that fast. Now, another interesting twist that came today, and I don't quite understand why it's like this, that the oil prices reacted such this news, but Iran its oil is going to be sanctioned by Europe on Monday, this coming Monday, and today is January 20th, 2012. Okay, so Monday would be the 23rd. Okay, 23rd. So oil actually fell. Oil took a hard drop today. And I don't know if it's specifically upon this news, but you would think it would have an opposite reaction. According to a source familiar with the matter, the sanctions will ban import of Iranian oil and also restrict Iran's trade in gold and precious metals, which to me that's a big deal, because their Iranian dinar lost about 50% of its value against the US dollar since 2008. So they're trying to get gold and precious metals big time. They are, because they're trying to protect true wealth, as well as free certain Iranian financial assets. Now, you know what happens if you're holding physical metals in your country, and what happened to Libya? They got invaded. Now, what happened to those gold? Right? I mean, yeah, you could say the Illuminati or whatever the heck it is, but I mean, there's disadvantages and advantages to everything. And it goes on to say, of the 2.2 million barrels of oil Iran exports a day, about 18% goes to the European markets, particularly like Greece and Italy. I think, Italy gets a lot of Libyan oil, but Greece gets a lot of Iranian oil. So that's going to be bad for their economy to have to find a replacement. According to the U.S. Energy Information Administration, and the world consumes about 89 million barrels of oil a day. Yeah, I heard 88, 89. I guess that's about right. So what we're going to see is there's going to be a lot of pressure on Iran. But this tells me that you're not going to see a strike on Iran by Israel, because I think that's going to, because if they would have never sanctioned any of the Iranians more by boycotting their oil, I think Israel would have lost their patience and they would have struck Iran probably in March or April, and that would have been the end of it, and there would have been war at that time. But since they're doing this, I think this holds back Israel better because Israel's more satisfied. I know you people don't want to hear this, but I'm just going by what the reality of the situation is. They're not gonna. If Iran wasn't sanctioned and they had to postpone this embargo for 6 months, I think Israel would have struck. I'm just going by the facts. I'm just going by the facts. Okay, that's what would happen. Iran is expected to still be able to sell its oil to places like China, India, and other Asian countries. Now, I'm not even 100% sure about this because India, they stopped selling oil, a lot of oil to India, and Saudi started picking up the slack for that. The reason being was India was not paying Iran, and it wasn't because they didn't want to pay him. It was because sanctions were slowing down the payments. It was making them very difficult to pay Iran. So they have this direct barter agreement. I don't know how it works exactly, but it's with China. Direct barter agreement, so I don't know, maybe they'll be trading oil for gold and silver for all I know. But maybe not. Maybe the Chinese will want to give them toilet paper money instead, you know. Knowing them, I think they would. I would. But when they're also trading to China, China's going to be able to cut a better deal because they're not allowed to trade with most of the world. So China's going to be able to get the stuff at a discount. You're talking probably a discount of 10 to 15%, but maybe even more. But if you're talking 15% off the selling price, how much of a percentage is that off your profit margin? You got to remember, you know, you got to remember that's probably like, I don't know what it would be. Maybe that's 50% of your profit margin, right? So that's going to hurt Iran big time. Now I don't know what they're going to do, but I would surmise that there's going to be a war with Iran, and they're going to be pushed right to the hilt, and they're going to strike. That's what and the West is going to make it. You know, they did the first move, but this stuff's been going on forever. You can also say that Iran is also making the first move by using an oil burst, which, you know, if the thing was going to be fair, would use all the world's currencies. And maybe you're saying, well, we're not going to be forced to invest only in U.S. dollars, but we want it to be open to U.S. dollars. So, you know, there's a little bit on both sides, believe me. It's not all one way. Even if you're like 100% for Iran or 100% for U.S. or whatever, there's a little bit on both sides. But as always, it's always over money. Period. That's what wars are about. Money. And despite what they say. So looking at this oil chart, we saw a serious nosedive today in the price of Brent, also on the WTI. Now I'm mainly out of the oil. I'm still in it because I don't really know. I'm not in that double leverage stuff. But it's probably, I think it's going to bounce after it goes down a little bit further. And some news is going to come out that's going to bring it back up again. Now, if it goes down about 95, now not on the Brent, but on 95 on the WTI, I'm probably going to buy some at double leveraged around 95 on this, the actual white light sweet crude WTI West Texas, and hold on to it for possibly a bounce. Now, as far as predictions by Lindsey Williams on oil, I'm gonna say the guy's not dishonest. You know, he's not. There's nothing really wrong with him there, but it's pretty much proven now. His surefire predictions that oil was going to be at least $150 a barrel sometime between June 2011 and October 2011 are so far off base now. It's beyond ridiculous. So just, you know, I put some faith in it, but I bet a certain way where I wouldn't lose out if I held on. And I went in there low enough that the double leverage didn't get, it didn't, you know, I didn't lose money because when I went in there double leveraged, it was $82 a barrel, and I sold it around $100 a barrel. So even though that would have been a gain if you're following an index of oil, but when using double leverage, it was like a break even. So word to the wise, I think Lindsey Williams is being played right now, and I don't know. I don't trust his information that he's getting out of him. I listen to him. I listen to what he's got to say, but I don't trust what information he's giving out anymore. So be careful. And I think maybe a lot of people are picking up on that now, but there's plenty of people that aren't. So you know, quite obvious he's been way, way off on his last predictions. And you know, considering he's getting stuff from an oil CEO that supposedly tells him flat out where the price of oil is going to go in a specific period of time. Well, he's well without it. He's well out of those parameters right now. And considering that the end of that time frame for $150 to $200 a barrel was October 2011, you're talking 3 months ago, and it's not even $100 a barrel. I mean, it was going a little over 100. He's way off, way, way off. So beware about these crazy predictions these people are saying. And if you see silver double this year, you're holding electronic funds. I'm dumping that part, definitely. I would, you know, I'm not telling people what to do, but I'm telling you, I think there's a lot more MF Globals out there, so you'd be smart to do that.